Hello and welcome to the Bulletin with UBS on Monocle Radio. Each week, the sharpest minds and freshest thinkers in finance take you beyond the numbers and hype, right to the heart of the big issues of the day. This week, we're discussing the 9th annual Art Basel and UBS Global Art Market Report. The 2025 edition, compiled as ever by Arts Economics, provides a comprehensive macroeconomic benchmark analysis of the state of the global market over the previous 12 months. It examines its various segments, including galleries and dealers, auction houses and art fairs, assessing their performance against the backdrop of changes in the global economic and wealth context. We'll hear from the report's author, renowned cultural economist Dr. Clare McAndrew, the founder of Arts Economics, from the CEO of Art Basel and from the chief economist of UBS Global Wealth Management on today's programme. Let's start with Art Basel's CEO, Noah Horowitz. Noah, always a pleasure to welcome you back to the show. Just give us some headlines, first of all. Well, how's the market shifted and advanced, not just in the last 12 months, as I normally ask you, but actually over the last kind of decade? Zoom out and give us a quick overview about the last 10 years. What's the direction of travel?
Yeah, well, look, the market over the last decade has toggled, roughly in the range of about 55 billion to the high 60s, 65, 68 billion. This year in the 57.5 range. So, the market has trended down now for 2 consecutive years. 2024 easing further from, a smaller decline in 2023. But when we zoom out, we see that, the patterning is very on trend within a very established band. And I think as the year progresses, there'll be a lot of gazing to try to understand whether we're in an upward cycle again out of 2024 or whether things tighten a bit further heading forward.
Well, to that exact point then, help us understand that context a little bit, because I guess people know, maybe this is the mistake they make, is they'll interrogate the report in particular and say, oh, look, absolute decline in sales value. What do we need to bear in mind? Is it that, you can't compare what might be a record-breaking year with another, or, is it that you just need to sort of keep zooming out and keep these longer-term cyclical shifts front of mind, or maybe it's a bit of both?
Yeah, I think it's a bit of both, actually. As a historian of the market, I'm very focused also, and of course, my leadership of Art Basel on these longer arcs in the market. And I think it is a bit of both. I think, one, we should be very clear on the fact that art has tended to trade in the ranges previously stated at a very established way for some time now. So I think, that we should be very clear on. Equally, the composition of trade has ebbed and flowed over that period. For some years, especially acute in the post-COVID period, the market was really brought up, by very high value trading, in the upper echelons of the market with a lot of, major sales, major auctions, and a lot of contemporary and modern artists whose prices were skyrocketing. That has softened somewhat. The high end of the market fell out over the course of the past year. There were less sales in the $10 million plus category by nearly 40% than there had been in the year before. But equally, we're seeing a more diversified pool of buyers. We're seeing a lot of younger buyers coming into the market. And volume of sales actually tracked up last year. So the composition of sales within that band of roughly 55 to call it $68 billion has shifted, but the range is still very well established.
Well, to that point about your leadership of this amazing institution then, Noah, and how that's changed, what about the role of the fair, the art fair more broadly, and not just through the prism, of course, of Art Basel, but in this whole sector, if you want to call it that, in the art market today? I mean, how's that changed? Because, I don't know, you must have, I guess, developments, some of them will accord with your expectations. As you said, you're a student of history of the market, but some of them must have surprised on the down and upside. Tell us a bit about that journey over the last, 10 years or so?
Well, look, in that period of time, the art market writ large has become an incredibly event-driven marketplace. Whereas previously there was more evergreen selling, more and more buying and selling, more interactivity between buyers and sellers, and more pipeline generation for galleries, dealers is coming through fairs, it's coming through auctions. So that pattern has really established itself. In terms of fairs directly occurring at art fairs, we've seen that come down somewhat over the last years, but it actually was up again last year to 31% of all dealer sales coming as a direct result of fair participations. And so the imprimatur of fairs in setting pace for our gallery community, for creating moments of interactivity, as well as buying opportunities is as clear as ever. Equally, the cost of participating in fairs, the cost of moving art and goods around the world has also gotten more costly. And so as a business platform, from an Art Basel lens, we're acutely focused on driving value to our clients, creating, better and better touch points, obviously, but also we're increasingly price sensitive as well, because we recognize that, the fees that we charge and the way that we work with our clients is part of a larger continuum in which galleries are having to ship, insure, and move art around the world. And a lot of those costs, especially in a post-COVID world, have increased. Obviously, there's a lot of discussion since last week about the impact of the new tariff regime, and the balance is out on that. I think we need to wait, hold our breath, see how that all shakes out. And then I think as a market and as a business within that market, we can prognosticate with greater clarity looking ahead to the rest of this year.
I was going to ask you about that, actually. What do you do when you're leading this institution? I guess people come to you and say, oh, no, what does this mean for us? What do you do? Because I guess we can look for the lessons of history, but some of these developments are they're knocking on the door of being unprecedented, or certainly none of us were around 100 years ago when we were in a similar environment. How do you keep a steady hand on the tiller? I guess you focus on the fundamentals, Noah, right?
Yeah, I think it's a one step at a time approach. We're encouraging our team, our clients, to take a deep breath, to buckle up, but also to not overreact or over pivot as all of this shakes out. We operate in a very global market interface. We ourselves as businesses, as you know, in 4 different countries at 4 different times of the year. The balance of trade between those different jurisdictions is not one and the same. Each area has its own proclivities, its own regulations. And so I think right now, we all need to take stock of this, and we also want to see how different things shake out coming through what's been put out, because there's every possibility that some of what we've seen in the last week could change course, and it will inevitably get clarified in the next weeks and months.
Noah, let's get a quick vibe check from you about Art Basel Hong Kong. I was very fortunate. I had literally 1 hour. I had to do a madcap dash around the convention centre myself. I saw some terrific works, and I thought there was a really interesting, very upbeat mood, as you had alluded to already. Lots of much younger buyers, it seemed to me, just casting a cursory eye. How did you read the sentiment on the ground in Hong Kong last week?
Hong Kong was extraordinary. And I think it's a very important reminder of the diversification of our industry. It's been a tough start to the year for many, certainly from a geopolitical standpoint in the US and Europe, as we all absorb a new regime in place. Equally, the interesting thing in Hong Kong is, the markets there are rebounding. It's been a challenging moment. We see that through the numbers, certainly in mainland Chinese buying over the last few years, also last year in the art market report. But the stock markets have been up, business activity has picked up, and we saw an extraordinary response in Hong Kong with significant uptick of buyers and attendees from mainland China, from throughout Southeast Asia, and Asia more broadly. Indeed, we had a total attendance of over 90,000 visitors, which was up nearly 10K year on year. And the fair was a huge success by all metrics. I think keeping consistent with trends in the market, higher end sales happened. We saw some extraordinary sales activity, Mikhail Bormans, Louise Bourgeois, and others, in the 7-figure range. But it was particularly notable how fluid sales in the lower price points. And for Art Basel clients, I'd say that's below 250,000 or so, was manifest with a very particular lean in from the Asian audience.
Well, let me just ask you one final question about the US, not political in character, I promise this time. Look, the US is still a critical, leading market, of course. Digging into the data, I know, you love to get stuck into the details, Noah. Anything jump out there from the other side of the pond that, I don't know, was particularly arresting in this year's edition of the report?
Well, look, I think the U.S. has continued to hold its leading position in global art sales by value. I don't think there's any great change there. We certainly saw in the fourth quarter after the election an easing of tension. I think election years are always challenging. They tend to keep buyers and sellers on the sideline to see the outcomes are. And we saw a very resounding response at the end of the year in Art Basel, Miami Beach. Looking beyond that, I think one tendency that we've noted within the U.S. market over the last decade, as we discussed the longer term view, is the regionalization of the market. The imprimatur of New York as the single dominant center. Of course, it is still the dominant center, but we're seeing more regional centers with greater depth and vitality standing up. None more so, by the way, than South Florida and the corridor between Miami Beach and Palm Beach, but also, of course, LA, the Bay Area as well, the Midwest. And so there's a real diversity and texture now in the US art market landscape that is super important. And then even within New York, the rise of Tribeca as a neighborhood has given greater texture to how people go around seeing art and experiencing art, looking at art in New York City. So it's a changing and evolving market. Similarly, as other things we've noted in the report, there's new buyers, there's a lot of younger activity. There's a bit of an intergenerational shift going on in terms of who's setting the tone and the pace for buying in the market these days. And we expect that very much to continue.
Noah Horowitz. Now, it's a great pleasure to once again welcome Arts Economics Clare McAndrew to the programme. Clare, welcome back. Always delighted to chat. I look forward to this time of year every year and the chance to catch up with you about the report. Let's start, Clare, with the piece. Can you summarise, some of the key takeaways from this year's edition?
Yeah, you can't really sugarcoat the fact that the market is definitely down. It was down 12% year on year to 57.5 billion. We'd had a pretty good recovery after COVID for a couple of years, but the last 2 years we've seen a decline in sales, and last year a little bit more sharp than the year before. But on the brighter side of things, despite the fall in values, the number of transactions kept rising, which is a really interesting feature. The number of transactions was up about 3% year on year. So you see this kind of dichotomy of values falling and volumes rising. And it's a broader base. The one part of the market that's growing is the lower price segments, whereas the top end, which really drives these big numbers, has slowed significantly.
So if we drill down into the detail a little bit more then, tell us about some of the biggest shifts. I think that's really interesting in terms of the number of transactions, but maybe just pick out some of the other sort of key shifts that we can identify from the last 12 months data.
Sure. We look at all the different regions, and that's been an interesting one to track as well. The US, obviously still the biggest market, about 43% of the value of sales, but that has now seen a slowdown for 2 years running, and sales dropped there by 9% to just under 25 billion. It's still the headquarters in the world for the highest price sales, and they're the segment of the market that was slowing. So that's what caused to slow down there mostly. The UK is the same. It's another kind of key hub for high-end sales. So we've also seen a 2-year decline in the UK to 10.4 billion. And Europe generally fairly flat. France was down 10% as well, and the EU down by 8%. China is a really interesting one, though. It's kind of gone against trend a little bit. So it had a very bad year in 2022 with kind of the kind of prolonged lockdowns, but bounced back a little bit in 2023 while other markets were declining. But we've seen it kind of fall into line now in the last year, and it had quite a severe drop last year of 31% to 8.4 billion. So that's the lowest level the Chinese market's been since 2009. So we kind of had this divergence a little bit for a couple of years where China was doing a slightly different dance than the US and UK, and that kept our figures a little bit more muted. But now that everything's kind of come back in line again and the three major markets were down, that's where we see this bigger drop in sales. And that has reshuffled the global ranks as well. So the UK moved back up into second place with 18% and China back down to 15% in third place.
Yeah, and I think the China figures you mentioned there is certainly one of the most interesting data sets. In terms of unexpected findings, I don't know, what would you pick out, Claire? I thought one thing that struck me was that we saw dealer and public auction sales falling in 24, but private sales by auction houses countered quite significantly year on year. That was one that I thought was somewhat unexpected, but what were some of the kind of less expected findings as you see it?
Yeah, that was a really interesting finding. And we do see that a little bit in down markets, or when things are a little bit volatile and less optimistic, that the private sector does a little bit better. And that was very much the case. I mean, public auction sales were down 25%, but private sales by auction houses were up 14%. Now, they're a much smaller segment, so it didn't hold the market up. But it's interesting that people like the flexibility and the control, I think, when everything else is so uncertain, as it was last year. There was so much going on and not all of it kind of positive. So people didn't have a definite view of how things would go if they sold them publicly. So you have that just sense of control of both of the schedule and the valuation and the final price a little bit more when you're selling privately. And that's what some of the auction house vendors chose to do. And it's, talking to some people in the secondary market, especially in auction houses and dealers, it was very much a supply related challenge. Especially towards the end of last year. So people were just, holding back and waiting to see what was going to happen next. And we thought we had a little bit of kind of, even if people didn't particularly like the outcomes of various elections that happened during the year, we thought we had a bit of certainty at least. And things were starting to kind of pick up a little bit again towards the very last months of 2024. But now we've seen so much uncertainty return to the global sphere that it's, who knows what's going to happen next.
Well, yeah, and it's funny. We were just chatting to Noah Horowitz a little bit about exactly that earlier. What the backdrop is, what the context to a lot of the findings are, and just to interrogate that briefly, Claire. People will look at the report and they'll delve into the facts and figures. But what do people need to keep in mind? If they're trying to look at the findings and sort of extrapolate, what does this tell us about the sort of status of the market? What kinds of things do people really need to keep front and centre? Because you've alluded to one already, which is sort of the prevailing mood and politics, that kind of thing. There's lots of complexities. What is the useful context to keep in mind?
I think it's important with this report to keep in mind, it's one of the most challenging things I face when I'm trying to put the research together, is all of the different parts of the art market that you need to kind of put together to make these industry-wide figures. But that's the one thing that saves the art market in general as well. When some parts of it are not doing so well, there's other parts doing okay. And we saw that very much still last year, even by value segment and by sector as well. So the things that really drove the recovery out of the pandemic low were ultra contemporary and the high end. And now they're the two things that really kind of slowed down a lot in the last year or so. So it's just to remember that the market's made up of hundreds of different sub-markets, and, it's not all doing the same thing. And just because values are down doesn't mean the value of a particular artwork is down. It's just the sales are down. And it's such a supply-driven marketplace that, if some positive catalytic events would happen, that could turn itself around again. So it's just that's one thing I would always remember when you're reading through it, is just it's not a cohesive whole. It's made up of lots and lots of different markets, all on their own different trajectories.
Clare McAndrew. Now, as global lead partner of Art Basel, UBS has a long history of supporting contemporary art and artists, as well as having one of the world's most important corporate art collections. UBS seeks to advance the international conversation about the art market through its partnership with Art Basel and as co-publisher of this report, and also others like the Survey of Global Collecting. UBS also supports some of the world's most important arts, institutions, events and fairs. And it is a great pleasure, with all of that in mind, to welcome back to the programme Paul Donovan, Chief Economist in UBS Global Wealth Management. Paul, always great to chat with you. Let me start, Paul, by asking you about the democratisation of the art market, a theme we've actually discussed in previous editions. What does the 2025 iteration tell us about that?
Well, it's very interesting that we continue to see this process of democratisation going on. Now, what I mean by that is that you're getting, for want of a better expression, new blood coming into the art buyer market. You're getting new collectors coming in who are not going necessarily for the ultra expensive artworks. They're still obviously relatively highly priced because art is an expensive collection. But you're talking about a growth in the number of people buying art below the $50,000 mark. And we can see that because whilst the value of sales has come down again in the last year, the volume of sales, that's to say the number of sales, has gone up. And the main reason for the decline in the value of sales is that the very, very high end of the art market has seen some slowdown. But you're still seeing this very lively less expensive area of the art market continue to perform. And I think that that's a good thing for the future of art collecting.
Well, Paul, let me ask you, because there's another thing that we've discussed before, which I think speaks to this and exactly to the trends that you've just described there, which is the wealth transfer. And we've talked about the intergenerational one. We've also talked about the amount of wealth that's passing from men to women at unprecedented rates. If we look at that wealth transfer, how's that reshaping collecting? And what does the data tell us about what that journey looks like?
This is a very interesting question because, of course, the global wealth transfer over the next 20 years is very sizable. It's about $83 trillion. And we have the two trends, obviously wealth going down a generation, but also wealth going sideways. And the fact that women are likely to be controlling a majority of the world's wealth at the end of this process. So we're seeing these very dramatic wealth shifts. Now, we're right at the start of that process. So I think that we need to be cautious about looking too hard for this in the data so far, but there are already some signs coming through. So what are we seeing come out of the great wealth transfer? One thing is that you're not seeing collections generally be broken up or anything like that. When collections pass down a generation, the younger generation very often will retain all or a large part of their parents' collection. Even if they have different tastes themselves, there's still sort of recognition, perhaps emotional ties to the art that their parents have collected. Now, there is a certain amount of selling, and that could be classified not quite as forced selling, but sort of a bit like that one of the main reasons that the next generation might sell several pieces of art from their parents' collection is to cover inheritance tax liabilities and things like that. And of course, in the UK, that's been a long-established tradition of handing over artwork to the nation as an offset to inheritance tax. It's been widely accepted. So whether it's donations or whether it's actual sales to raise cash, there is an element of that comes in. But what we've also got to recognize, of course, is that with a new generation starting to control wealth, they may well have different tastes to those of their parents, and they may well want to invest their time and effort and, of course, spend their money in a different way to their parents when it comes to the collections of art. One thing that we are tentatively seeing, and we need to get more evidence of this over time, is that as women control more of the world's wealth, there also has been a rise in the role of female artists in the art sales and so forth. Now, female artists' sales are still a minority of overall sales, but they have been on the increase. And that has coincided with women becoming more significant as controllers of wealth over time. So I think that's an interesting trend to keep an eye on in the years ahead.
Well, just to pick your brain, Paul, more broadly, if we look at the report this year, did any of the regional shifts that Clare and others have picked out through the report strike you? Yeah, geographies or other emerging trends across the sort of collecting landscape that you just thought, oh, that perhaps was or wasn't what I was expecting?
Well, I think the slowdown in sales in China, or Greater China, including Hong Kong, for example, that's not perhaps entirely unexpected, given that the economy there has been somewhat softer. And China had a later emergence from the pandemic, so it had a later post-pandemic boom in things like art, and then that has perhaps calmed down. And so then inevitably, obviously, you've seen the UK market increase its market share. The UK, like other markets, has seen a decline in the value of sales, but it's not been as dramatic as it has been in China, or indeed, for that matter, in North America. So that's not a particularly surprising trend, I think, in terms of the geographies. And it was just being confirming what the economic activity would be suggesting was likely to happen in this sort of situation. Unfortunately, we're now in another uncertain period with the economic nationalism of the United States and the trade protection and the tariffs, and there is a real lack of clarity about what that might mean. So the relative performance of the markets last year now run into something of a structural break this year with increased uncertainty around the States, not around other markets, but around the States, something that perhaps we're going to have to be contending with. So I think the trends last year were not particularly surprising, perhaps, but the geographic trends this year are going to be quite uncertain over the course of what is a rather turbulent period in terms of regulation and trade.
Yeah, I think understated, Paul. And just on that very point, I'll caveat this by saying, of course, things are so fast moving, literally from one day to another. The market moves and all the rest, and the policy moves seemingly coming out of the White House. Clare McAndrew made this point that the ongoing expansion of the market to wider audiences, which you've just reflected upon, has and one would imagine, continue to rely on, I think she termed it the unencumbered exchange of art across borders. And, that's essential to its robust growth. No sector presumably will be immune to tariffs, but is there anything to think about in particular when it comes to the art market from the current sort of machinations? Or like everything, do we sort of have to wait and see to an extent?
Well, I think the first thing that we have to remember, of course, is that we're not experiencing a global trade war. We're experiencing, frankly, an act of self-harm on the part of the United States. The United States is cutting itself off and creating barriers with the rest of the world. So that's a very different situation. Now, what that means is that the movement of art between the UK and Europe, or the UK and Asia, and vice versa, that's not going to shift. The situation today is the same as it was this time last year for that. The questions around the movement of art between the rest of the world and the United States, that is less clear. Now, traditionally, art and antiques have been exempt from tariffs. They're not normally included. It does appear, in what is an extremely uncertain position, that they are now starting to be included. Certainly with the tariffs on imports from China, this is being included. And then there are interesting questions like if you have a 25% tariff on imports of steel and steel articles, does a steel sculpture count as a steel article? This is one for the lawyers, I'm afraid. But that uncertainty, the fact that, as an economist, I'm sitting here and saying, I just don't know what the tariff regulations are. It's not really clear. That uncertainty is something which is going to have a bearing on the willingness of people to trade back and forth across boundaries, essentially.
Paul Donovan bringing us to the end of this edition of the programme here on Monocle Radio. You can listen again and explore more at monocle.com or follow the show wherever you get your podcasts. Don't forget to discover more and find out how UBS can help you at ubs.com. And for more information and resources to better understand UBS's own passion for and support of the arts, do head to ubs.com/art. I'm Tom Edwards. Thanks for listening.